Right, it's 2 p.m. Central African time. Thank you so much for joining us here on ERS Tax Talk, this Thursday edition of Market View. Coming up on the show today, 4,600 businesses across the Kingdom of Eswatini have felt the knock of the Bafunzise campaign, the revenue service going door to door, not just collecting the taxes, but also educating people, shaping compliance, as well as changing the way that businesses think. We'll hear from Nkosi Mahlalela on why this campaign matters now more than ever. Nkosi sat down with Nelsiwe and Langamandla Ngumalo, who is our business journalist, and they had a very interesting and candid conversation that you want to listen to. But also on the program today, we'll have Saneless Bia as we take a closer look at Eswatini's public debt, down 3% to 37.4 billion in July, with domestic debt taking the biggest hit. We want to understand what this means for our economy. Who better to answer those questions except our economist, Sanele Sibia. A minute after 2, let's start our show with our business news. On our first story, Eswatini's consistently stable debt to GDP ratio, which has never exceeded 40.7%, reflects strong fiscal discipline and financial stability, a positive signal for foreign direct investment. This was highlighted by the Minister of Finance, Honorable Neil Reichenberg, during the Tourism Indaba, which was held at Shama House. He shared that the economic growth is projected at 7.9% for the current financial year, and he says that it is good for investment.
One of the most critical indicators of our financial prudence is our debt to GDP ratio. I'm proud to confirm that Eswatini has maintained this ratio at a healthy and sustainable level, currently standing at approximately 40.7%. This figure is not just a number on the balance sheet, it's a powerful signal to the world that we are a fiscally responsible nation. A place where investments are secure and future generations will not be burdened by excessive obligations. This stability creates an ideal landscape for both local and international investors to confidently pour the resources into our country, particularly within the tourism sector. Furthermore, we are witnessing encouraging GDP growth. Our economy is projected to grow at a robust 7.9% in the 2025-2026 financial year. This growth is a clear indication of robust and expanding economy, reflecting increased economic activity across all sectors. This rising tide lifts all boats, and its impact on tourism is particularly significant. The growing economy means that more than our own citizens have means to explore and the wonders of Eswatini, thereby boosting domestic tourism. It also strengthens our international standing, making the kingdom a more attractive and more viable destination for foreigners seeking to visit our unique and have enriching experiences in Eswatini.
All right, now from this to our ERS Tax Talk conversation between Nelsiwe and Nkosi shortly. Right, in March this year, the Eswatini Revenue Service launched the Bafunzise Door-to-Door campaign that is aimed at educating taxpayers as well as improving compliance. Now, the campaign has reached over 4,600 businesses countrywide. But to unpack the significance of the campaign and why it matters, especially now, Manager of Taxpayer Education and Information, Nkosi Mahlalela, sat down with Nelsiwe Ngamandla, our business journalist, for a very candid conversation. Let's listen.
Nkosi, thank you so much for joining us on the program today. We are speaking about the Bafunzise campaign. For someone who has never heard of this campaign, can you briefly give us an overview? What is the Bafunzise campaign and why is it important?
Good afternoon, Nelly. Thank you so much for having me today. So Bafunzise campaign is an ERS nationwide taxpayer education campaign where we are going door to door to businesses, especially SMEs, educating them on everything tax. This includes your domestic taxes matters as well as customs. And the main goal for this campaign is ERS is actually intentional in tackling and dealing with every barrier to compliance, especially among the SMEs, so as to assist them in their journey to compliance and making compliance easy.
What are some of the subjects that you are covering as you go about this campaign, table?
It's quite a number of subjects that you are covering, but of course we are educating them on TIN registration, because one pillar of compliance is that you have to be in the database of the ERS for you to be a taxpayer and for you to be able to file your returns and then make payments. So one big area that you are covering whilst we are going through this door-to-door, we are educating them who should register, how to do the registration. We're actually going an extra mile of doing on-site registrations for those clients that you are finding that they do not have TINs yet they're operating. So we're also assisting them on their filing, assisting them. We recently have introduced a new system where they are filing schedules online. So we are hand-holding them also on whatever issues that they might have whilst they are doing their filing. So we are covering filing as well and other questions that they might be having. We have a team on the ground. They are able to assist and respond to those questions, but also they are able to escalate if those questions might be complicated. We are able to escalate also to the team at the HQ.
The campaign was launched in March. I want to understand how many businesses have you reached so far and which places have you visited?
Since we launched Bafundise in March 2025, we have been able to engage over 4,600 businesses across Manzini, Matapa, Mbabane, Eswatini, and Eswatini towns. To give a sense of the profile, Manzini launched 1,777 engagements, which is about 69.4% already holding TINs. Matapa, we engaged about 931, which is our highest TIN share at 88.9%. And then Babane, we engaged 1,667, which is about 72.1% with TINs. And in Zuluini town, we engaged about 229 clients with one of the strongest compliance profiles actually at about 89%. We are currently in Hlangano, which we have already wrapped up actually, and have reached about 522 businesses in the town, which gave us 73.8% already having TINs. These touch points are not just opportunities to engage with clients. These are moments where we solve issues on the spot and book follow-ups for what needs more time and engagement with our clients, even as we continue assisting them with compliance.
The level of compliance from these businesses, I was listening to the numbers, very impressive, but I want to understand if there are gaps that you are seeing and what is it that you are doing to try and close those gaps.
It's quite a number of gaps that we have come across as we're engaging our clients on the ground. But I think I'd like to highlight maybe three of the problems or gaps that we found out. One of which is that we are finding businesses operating without TINs. They do not have the taxpayer identification number. They are not affiliated in our database, yet they're in operation. But even as we are engaging them, some didn't think they're supposed to register because of the scale that they're operating in. They thought they are too small to affiliate in the ERS database. So that's one gap, and we've been able to engage our clients. And actually, we've gone to the extent of registering them on site, those who were willing, and we've also guided them on how to go ahead with the registration, which is now going to make it easier for us to nudge them and assist them also with compliance, even as they are continuing. And the other gap that we've come across is the understanding of VAT. Who should register for VAT? Who should charge VAT and what percentage? For what goods should we charge VAT? So we've also been able to engage our clients even as they are asking us the questions around VAT, who should be a VAT vendor or administrator. So we've been able to assist them. And then one big one also that I would like to highlight recently we introduced the online system for our clients to do their taxes, which is called Tax Ease. So this system has come with new technologies as well of filing, which is now we are expecting our clients to file using schedules. So one gap we found that our clients are struggling with how to download these schedules online, how to populate these schedules, and also how to upload these schedules for us then to say they've filed. So we've been able to assist them on a one-on-one basis, on the spot. And we've also been able to escalate some of the issues also to the HQ and assign individuals to do follow-up calls and assist our clients on the gaps that you are facing on the ground.
Having spoken about these gaps, Debo, I want to believe that as the Eswatini Revenue Service, you also want to understand the business environment, understand the trading dynamics. So what is it that you are learning about your clients as you continue to push forward this campaign?
Thank you very much, Nelly. So Bafundisa campaign is not only just meant for our clients. Actually, we are discovering that as we are continuing with the campaign. It is also created a platform for the ERS to get feedback from our clients, also giving us better understanding of their businesses, their business natures, and their spaces and how they are running business, and also the key problems that they might be facing in terms of wanting to comply but having the barriers. So I will make an example of the town Hlangano that we've recently visited. But this has given us an opportunity to understand the dynamics of how our clients are doing their sourcing of material. Hlangano, we found that about 50% of the businesses, they source their material internally from Eswatini, but part of businesses as well, they are sourcing from outside, so they are importing. And then a section of Hlangano, I think about 13% or 31.4% of Hlangano is actually doing both. They are sourcing both internally as well as importing. And that now brings dynamics of customs. And we have already picked that our clients now have questions around classification, how to do declarations at the border, and how to engage clearing agents and all that. We've been able to assist our clients on the ground, and this has also created an opportunity for us to escalate some of these questions to our customs unit at the HQ. And we are happy that the engagements are ongoing. Our clients are being assisted on the ground, and we are happy that this has created the platforms for our clients to also be able to voice out the challenges that they are facing. We are expecting them to comply this side, but it's not fair if we don't understand what issues and problems that they are facing on the ground. So Bafundisa has created that platform for us to understand the dynamics.
Very interesting trading dynamics in Hlangano, Cebo, quite impressive. But I want you to speak now to a business owner who's watching you right now, and maybe they want to know more about the Bafundisa campaign. What is it that they should prepare before you arrive?
For every business that is out there, first of all, we'd like to give the assurance that Bafundisa campaign is coming at your doorstep. The plan is that we are rolling out Bafundisa throughout the whole country. We will be visiting all businesses, whether you have a team or you do not have a team. Just make sure that you prepare all those burning questions that you'd like to ask from the ERS, all those challenges that you are facing whilst you are trying to comply, because the biggest desire or vision that you are having is 100% voluntary compliance for a better Eswatini. So please ensure that you expect us, bring those questions. Just know that we are coming to your door to educate, to empower, and to enable you so that you are able to do compliance. Compliance, we want to make it simple for all businesses operating in Eswatini. So please do expect Bafundisa to come at your doorstep.
When this campaign was launched in March, it was shared that you will also reach businesses on Swazi Nation land. So I want to know, who will you be partnering with to reach those businesses that are beyond the city?
Yes, Bafundisa campaign is currently running through the towns of Eswatini, and I've been saying that the plan is that we'll cover the entire Eswatini. We'll be visiting all businesses in Eswatini. So I'm happy to announce that this afternoon we'll actually be meeting the Ministry of Tinkunda with the regional administrators. rolling out a plan how now to tap into the Swazi Nation land. We are coming to the Swazi Nation land, we are coming to Tingundla, we are coming to Imiphakathi, Bokoko Center. We are going there and making it simple and making it easy and explaining all the dynamics of tax. Who should register, who should have a TIN, how to calculate tax. We're actually bringing that emakhaya, see it.
What is your final message to businesses or business owners that are still hesitant to engage with the ERS?
As the ERS, we want businesses to know out there that you are here to help them get their compliance issues in order. We are here to simplify compliance. It doesn't help us for our clients not to be able to be compliant. So we're here to simplify compliance in every way possible. So we want to know what issues are you facing on the ground so that we can enable you, so that we can empower you to be compliant. Just know that Bafunzise is coming and we are coming door to door so that we can hear from you even as we are educating you. We are not just only leaving information, we are also issuing out brochures and materials actually as we are rolling out this campaign. So we also have translated part of our content into Siswati for those that will be comfortable to reading in Siswati. So we are issuing them in English and Siswati, and actually also from the questions and the issues that we're getting from Bateli Betu out there, we are able to be informed now to craft and design even more content that will speak to the actual questions and problems that our clients are facing. So we just want to give the assurance that if you are unsure of VAT, if you are unsure of pay-as-you-earn, you are not too sure of customs and domestic taxes, we are here to assist you. We are coming at your doorstep, and don't even shy away from calling us and reaching out and finding out actually on our schedule when are we coming to your place.
Maybe share the contacts table. Where can businesses reach you?
Eswatini Revenue Service is available in all the big towns of Eswatini. You can visit our service centers, and then you can also visit our website online. It's www.ers.org.nz. You can also call us on 2406 4050 or drop us a WhatsApp text at 7606 3735. We're also available on all social media platforms. You can visit us on LinkedIn. You can even visit us on Facebook as well. You can also drop us an email at info@ers.org.nz.
Tebo, what stands out for me from this conversation is that ERS is trying to simplify tax compliance. For me, that's a powerful message because you are sending a clear message that you will always be here to give businesses the tools they need to stay compliant. Siyabonga kakhulu for being with us on the show.
Yeah, what a really good conversation between Nelsiwe and Kobolenkosi there on the Bafunzise campaign update. Now, another update coming right up on our market analysis as public debt takes center stage. Yes, a young spin on our market analysis today as we discuss the latest figures on public debt as released by the central bank governor. Coming right up. Okay, total public debt declined by 3% to 37.4 billion in July this year, down from 38.5 billion in June. This represents 39.1% of the gross domestic product and reflects a drop mainly driven by reductions in domestic debt, while external debt registered a slight increase. Now, this is highlighted in the recent economic development report by the Central Bank of Eswatini, showing promising signs of fiscal discipline and economic stability. Sanela Spear is in studio and is going to unpack whether this is a really, really positive sort of trajectory that we are seeing. Mr. Spear, good afternoon. Welcome to the show. When 3% in July, that is the drop, largely due to, of course, the reductions in domestic debt. That is what these figures are telling us here. How significant is this shift?
Thank you, Mr. Nxumalo, and good afternoon to the viewers. So I think what we're looking into here, Mr. Nxumalo, is a good shift but all of it, whether we celebrate or we don't, is largely contingent on what the government will do next. Because this reduction comes as a result of a decline in domestic public debt. So what one can read into, and when you look into the report, it actually it points out that this reduction is due to the fact that government has actually paid the advance that the central bank gave to the government. So if government is not going to need this money going forward, then we should expect to see the figures staying at that 38.1% of GDP, and it should dip even further come December when we settle the IMF loan. But if the government now goes back to the central bank and says, re-advance me the 2 billion, then we are going to see public debt again increasing, and it's going to be a bit higher than the June figure, because remember in June we were waiting to see those impacts, the new World Bank loan, the new RIDB loan, and that new, I think it was a Q80 loan, I'm forgetting the OPEC loan. So all those are just going to start coming in now in terms of those commitment funds and all of those things. So it's actually going to be, that's what we're waiting to see, how that's going to be.
It's interesting, with these figures on screen right now, I think the easiest thing to recognize is that, yes, public debt is decreasing, has decreased, while external has increased. You know, that divergence, what is it telling us? Is it strategic? What is it signaling?
For me, no matter what that signals is just a transient effect, but actually, to me, it signals the fact that we are still on an upward trajectory, but contingent on what government is going to do, because that decline is due to government settling off a loan, an advance from the central bank. If government then again comes back and gets that loan again, so that slight increase in public external debt plus domestic public debt going back to the initial levels, those June levels, then going forward into August and September, we should see the figure well above what we came into.
So nothing to be concerned about until at least we see how government plays the cards that are currently dealt.
Yeah.
Interesting indeed. But the debt to GDP, I want us to talk about that, because that ratio, it is sitting at 39.1 for our viewers at home. How healthy is this ratio?
That's where we would want it to be.
How does it compare regionally?
Regionally, we are actually amongst the lowest. Yeah, even with our unhealthy 40.5% that we were at, and that our unhealthy 43%, we are actually the lowest in the region. But what we'd want to do, Nxumalo, is to get government to stay at that level. And the ideal picture would be to take it back a bit, back to that 33% and 25% region, because that's when we are most comfortable as a country. But right now, the 30%, that's quite healthy according to IMF standards and according to World Bank standards, and we should maintain it below 40, so that's a pure positive move. Well,
that's the macroeconomic context of it all, but let's look at the drivers now as well as the implications, because we do want to appreciate the factors that contributed to this new reality. The reduction in domestic debt, I suppose that is the big conversation here. Are these one-off effects or part of a broader fiscal strategy?
I would say it is part of the government's fiscal strategy, because it's more...
Somewhat. Or
yeah, it's somewhat, because it's more an impact of budget support, because ideally the government would go into the central bank when they need budget support, when they need to spend, and then they get that money. So that's what we are waiting to see, and really just understand where it is going to go. But it's a bit worrying, considering that we are in a region, we were in a period where SACCO receipts have actually dipped a bit. But we did get quite a lot of external borrowing, and part of it is towards budget support. So we should hope that we are not going to see a rebound in domestic public debt.
Am I looking at the factors that contributed the most to the reduction?
No, that's the debt composition. So it's showing that bonds, that's how government mobilizes their bonds mostly. And then there's the treasury bills. And then there is loans from banks. And then you have your that advance from the central bank, which is what has actually declined right now, that advance. And that's one of the main driving factors there. Yeah.
Okay. Now, with domestic debt now representing, 19.9% of our GDP. How does it influence now government spending priorities or their capacity for public investment?
We have to think of our current debt, public debt, in an intertemporal space. We have to understand that we've signed quite a number of loans, approximately 12 billion, 11 point something billion earlier on in the year. Yeah, so what that means is as those loans come into being due, say for in the next 3 years, we do expect that one of those loans is going to start paying. We need to start paying on it, and then secondly, in the next year, in year 5, one of the other loans is to come into play, and then I think there is one, that concessionary loan, which you just have to pay at that point. So that we're going to need to see how that is going to affect overall debt to GDP ratio, and how government spreads that across the next 10 years, and which loans, because we know that this year we have the IMF loan that falls off, and once we can get that to fall off, then that's going to give us a bit of scope. But as it were, I do not see much of new financing scope, because we already have committed ourselves to some 12 billion.
Interesting indeed. Well, that is your market analysis, public debt snapshot, but our market analysis is not our market analysis without looking at the latest figures. Indeed, public debt dynamics is via everything that is happening, our economic growth outlook, President Trump's administration, Putin, Zelensky, a lot is happening. Just give us a summary of what's happening with the numbers.
All right. No, it's quite interesting, and it's quite a mixed picture of what's happening in the markets. So what we're seeing this week in the US is a bit of a sell-off in the major indices, that's both in your Nasdaq and in that S&P 500. Only the Dow Jones Industrial Average seems to be somewhat performing positively this time, this week, this entire week. So we're seeing a heavy sell-off led by the tech stocks, and the fact that, you know, retailers are not posting those beautiful earnings that overall Wall Street was thriving on in the past couple of weeks. So we've seen that Walmart has actually posted earnings that are below what market expected. Same thing with Home Depot, and I think same thing with IKEA as well. I'm not sure there, but the numbers that have come out of from the retailers are not good. So that's why we're seeing those. And we also know that President Trump is actually on that standoff with, you know, the Fed Chair Jay Powell, who's actually expected to speak tomorrow and give a bit of an indication of the Federal Reserve Bank's monetary policy trajectory. So those markets are a bit frozen right now, waiting to see what that address from Jackson Hole is going to look like tomorrow. And then going into Europe, what we're seeing there is an overall negative mood within the Eurozone, including London. So that's because we're seeing London inflation on an upward surge. So what that means is we're going to see a reversal in terms of those interest rate cuts that we're seeing coming out of the Bank of London. And the broader Eurozone is actually being hampered by the fact that markets are trying to understand what is in that deal between the EU and the US. And also we saw a barrage of 500 drones go into Ukraine overnight from Russia, and now that calls into question whether the peace prospects that were driving European markets the past weeks are going to hold. And we're also looking at for the conference in Jackson Hole, because it's going to determine to a larger extent global monetary policy direction. And then you move into Asia. Asia again is taking leave from global markets, just waiting to see what's going to happen in Jackson Hole. And what we're seeing that's interesting there is the Shanghai, mainly in China, is doing very well, with advances in fintech driving the markets there. And, you know, alternative currencies also performing very well and becoming a bit stable, and that is driving markets. And then you come into Johannesburg, you know, Johannesburg is showing some signs of strength, given the fact that we're seeing the numbers, you know, those earnings numbers coming into play. Quite a number of companies are posting beautiful profits, and the metals are continuing to shine. That's your platinum, gold, and whatnot. And we know that JSE is a commodity-heavy index, and then domestically we've not seen any change. And when you look into our commodities, gold is continuing to stay relatively at a high level because of the uncertainty over the Russia-Ukraine peace deal, and gold Brent crude is on an upward surge because we're seeing a bit of, it's summer in Europe and there's been quite an improvement in travel. And the inflation figures in London are actually largely driven by air travel. So people are just moving a lot right now. And when you come into the currencies, what we're seeing again is a relative weakness of the Lilangen, on the backdrop of a stronger dollar. So that's what we're seeing right now, stronger dollar and stronger euro, but we're remaining relatively strong against the Japanese yen.
And that's it for today's edition from the markets rather to the macro. So keep questioning and keep following. Until next time, thank you for staying with us. Bye-bye.